Everyone, welcome to Market Insight for the week of July 22nd through the 26th. Let's start with the monthly chart. For the first time since mid-April, the mid-April lows, we see weakness in the monthly price action. Keep in mind, we still have another 8 days of trading remaining in July, so this may change, but we can still see the weakness, and that's what's important. So there's a couple of things to note here. After making the 57.21 new all-time highs, price retreated back down into the lower areas of the price bar range. Well, this indicates selling on a larger scale that's pressing on the market. We also closed the week underneath June's high. I know this is the monthly chart, and we haven't closed the monthly yet, but we've closed the weekly, and that closes underneath June's high of 55.88. Now that may become a key resistance level for us next week, as we'll see on the lower time frame. So also note, we have some shortening of the thrust in the July monthly bar, right? Monthly bar highs, right? Looking at this from a high to high basis, from the May high, where are we here? Yeah, from the May high to the June high, we ran about 220 points. And then from the June high to the new all-time highs at 57.21, it's less than half of that. It's only 134 points, right, from the high to high. So 220 points to here, only 130 points to here. And so you can also see this on a close-to-close basis, which is actually even more striking. So we see a large move up from the close at May to the close of June, right? Then very little movement between June and July closes. So you can see the shortening of the thrust. We're just not making progress here. Again, keep in mind that the monthly hasn't closed yet, so that this will definitely change. But for the moment, it's helpful to see this. We've been patiently waiting for this as the monthly has been so significantly overbought, right? This is the trend channel here, and it hasn't changed. The supply line down here, we're way over the top, way overbought at that. So significantly overbought. And the reason it's so significantly overbought is because it's been so significantly bullish. Let's turn to the weekly. Excuse me. So the weekly's been in a well-defined uptrend channel since the lows of April. These are the late April lows down in here. You can see a very nice, I highlighted this in the green trend channel, very nice, holding the demand line, holding the supply line. And at the top of this trend channel last week, the range narrowed right here. On that bar, that's last week's bar, we narrowed down, right, with a mid-range close. As David pointed out in his book, and as we've discussed many times in deep practice, narrow range bars at the top of a trend run leave the market vulnerable for a reaction. Right? As you know, as the volume expands a bit on that week, it indicated an effort to try to go up on the part of the buyers, but their result wasn't to close it on the high or wasn't to break this supply line, it was to close it back in the middle. So the result wasn't that great for them. And we call this effort to go up, poor result. In tape reading this week on the daily, we'll get a better sense of the supply-demand relationship during that week. And we'll look at the daily in a moment. But last week, now I'm shifting over to the wide range bar here, right? Last week's, or this narrow range bar left, as I say, left the market vulnerable to a reaction. And we indeed got that pullback this week. Note the volume expansion and the range expansion. These are important to see. We see the largest downside weekly bar on the largest downside volume since what? Since the lows of April. In other words, it's the largest down bar and the largest downside volume since this segment of the trend run began here in April. So it's a key indication for us. Supplies entered the market. This is a change of behavior. This is a change of, this is a change of behavior, shifting control from buyers to sellers. Now, since April, every dip has been a buy. But this week's actions say buyer not in control. We came down to the lows here, this dip, and it wasn't able to be bought. The sellers started to push down, and they're dominating now. Now, that doesn't mean we won't see rallies, but we would expect those rallies to have a higher rate of failure, travel less distance, and in general, just be weaker than the one we've seen recently. So watch the character of any rallies this week until the character of this market changes behavior back to the buyers. We'll be looking to short weak rally. Let's take a look at the daily. So last Thursday in deep practice, you can see the daily here. This is the weekly trend channel here in green from the lows of April. Down here, I think it was April 19th was the actual low put in. And you can see a pretty well-defined trend channel going up with nice support here. So let's go to a little bit bigger chart to tape read this. Here we go. So last Thursday in deep practice, we discussed this bar right here. This is July 11th, and we called this a 2-bar top reversal. We characterized the top reversal as a widespread gut bar going over the top of the prior bar, but the prior bar is high, the prior daily is high, failing to hold this, right? Then falling completely through the range of the prior day and closing down around the lows on increased volume, right there. This occurred at the top, this occurred at the top of the trend run at important supply line resistance, the weekly supply line resistance up here. That's important resistance. So top reversals in a trend run up, and when we see this kind of configuration in the price action, context is important. And here the context is right at significant resistance. But just like a selling climax, it can still go a little higher. Remember, most of the time, a transition takes place. We don't just go straight up and then straight down. We have some sort of a transition. So let's see if we can see that transition in the recent price action here, in the daily price bars. So Thursday, top reversal, and that's bearish, right? We see the biggest, we see an increase in supply come in here. Then Friday, price tries going down first, then goes up, fails to go higher, closes in the middle, and it's doing so on sustained volume. Buyers remain present, but they're unable to hold the highs, right? By the close in the middle, we see that. The strength of the buyers wasn't able to overcome the selling at the day's highs. So now we're seeing selling on the top reversal up in here, and we're seeing selling in the next day up here. Again, this is effort to go up on the part of buyers, result pretty poor, okay? So sellers are starting to have an effect by containing the buying. Then on Monday, we have another up bar, this time on narrowed range, right? Closing near the lows, but still an up bar. And again, on sustained volume. More effort to try to push and the price higher, to rally higher, but again, the result is poor. Again, we see selling coming in here in this area, driving the market down, right? Tuesday, the next day, another narrow range day, this time on less volume, less than the prior two. It's a little bit of that's a thumbnail model to identify a lack of demand there. So buyers here, even though they closed it on the highs, this is the confusing part, right? Well, they closed it on the highs, so they must be overcoming the selling. No, on that weak volume, on that light volume, it says buyers are not showing a strong effort here. You have to have the fuel to push through supply like this. And there just isn't that. This is lack of demand. This is a no demand kind of bar. And it's also I'm not sure if it's an inside bar or almost an inside bar, but you can see we made very little progress that day. So this reflects weakness. We see supply, effort to go up, exhaustion on the part of, or no demand on the part of the buyers. Sellers now see this and they take advantage of the weakness, taking out the prior 2 days lows, erasing whatever gains we were able to make or hold on those days get erased here, okay? And the day closes down on the lows, and volume was what? Was high. It picks up again. Selling is coming into the market. And aren't sellers now in control? Sure, because look at where they closed the price, right? Buyers are trying to close it firm up here, are unable to do it. Sellers see that, they step in, bingo, they get a nice close, right? So now they're in control. They took out the lows of these days here. So we get a failed rally the next day, Thursday, into the broken Monday and Tuesday lows in here, right into the pocket area there, that pocket area at that point. And that causes the support around 56.30, which is this here, which is what was holding the market the prior day. It causes that area to break and to head lower, right? And we come down to the key level here at 55.88. Identified that as the June monthly high, right? So important support there. And that breaks on Friday and we head lower. So let's recap this a little bit, because this is what I wanted to highlight here. We see the transition from early supply, failed effort on the part of buyers to take price higher, exhaustion on the part of buyers, and then the selling comes in, okay? So sellers are now in control. That's how I would see this market. Now, the obvious target of this downdraft is down here. And this area is about 54.95 to about 55, but this area in here, 55.02, 54.95, in this general area. I expect this to be good support for a couple of reasons. First of all, there's a confluence of trend lines, right? This is the weekly demand line. So this is pretty important, right? And then we have this horizontal support line. So right in here in this area, we've got two important levels of support coming together. We call this confluence, and that either, when we have double lines there, it makes it stronger than either one alone. So there's a fair amount of support, and I also note lots of trading in here. So there are a lot of buyers that have been in here. They'll defend that most likely, at least the first time it comes down through here. Now, so that's the objective of this, but it's not likely to go straight to the target, is it? Right? I'm noting some shortening of. Let's erase this here so we're not getting confused. I'm noting some shortening of the thrust in here. So price in the last few bars we made good progress down to here, and then not so good progress in here, right? You can see that's the same thing we were talking about on the monthly chart, same kind of idea, right? So look for a flush and recovery of Friday's lows early next week, maybe Monday or Tuesday. Now, if this were to occur, I'd look for if we come down underneath, maybe down into the 55, 25 area, 55.30 area or so, 55.40 area, somewhere down in here, and then push back up and then test Friday's low. I'd be looking for a rally back up towards the monthly high here, 55.88. Maybe even if it can overcome this, maybe up to about 55.30, which is roughly where I put this line here, maybe a little bit lower than that. But that would be about the halfway point up into this vertical acceleration down, coming down. So that's a possibility too. So key levels for next week, 55.88 to the upside, then 56.30 to the upside. And then, potentially we see this come up here and then we push back down to 5,500, maybe even a little bit lower than that. Don't know if that'll happen. That's the general idea of what I'd be looking for. If we hold support here early next week, a push up to 55.88, maybe up to 56.30. But I think we're going to hit 5,500 before the end of the week. Let's put it that way. So that's what I'm seeing next week. Let's take a quick look at the major markets here. We see all of them now are back in sync. In fact, where the Dow was the weakest coming into this week, it's now back in sync and keeping with the other markets. In fact, it might even be a little bit stronger, which is typical, shifting back and forth, constantly doing that. The key thing to note on this chart is that all three markets, we just talked about this area on the S&Ps, we've got similar areas here on the other two markets. They're all approaching important support, which we would expect to hold and we at least get a bounce off of. Maybe not a full-fledged rally all the way to the top, but at least potentially a tradable bounce. So we'll see how that all comes into play. Next week, we have deep practice on Thursday, the 5th, and we'll see you all then. Everyone, take care. Have a good weekend and a good trading week, and I'll see you on Thursday night. Bye-bye.